Greetings, GRESB members and ESG colleagues, North America, South America, Central America, and from all around the globe. Welcome to the main event, GRESB Americas 2021 results. My name is Dan Winters. I'm GRESB Head of Americas, and I'm your host for what promises to be an outstanding event. We have exceptional speakers lined up from our North American industry partners, NAREIT, NAREEM, PRIA. We have an ESG academic research roundup from Avis Devine at York University, and a focus on carbon will anchor the event with Jonathan Flaherty at Tishman Speyer. We've got some surprise guests and much, much more. So today's event is hosted by Longevity Partners, a GRESB global partner. They're a multidisciplinary energy and sustainability consultancy. They work with nearly all of the large US open-end private equity funds, and they recently came and entered the US market. So we're going to hear from Sarah Welton in just a little bit and talk with what Longevity is seeing with their client base. And what they've done is they've brought their extensive EU experience to the US along with the BREEAM building rating system. So we'll hear a little bit about BREEAM and what it's, and what it's doing there. So my favorite thing that they do is they do GRESB consulting. So we'll also hear from Sarah about that. A few housekeeping notes, some mathematics, and a poll. So on the housekeeping side, GRESB public results are posted on our new website. They're underneath the sub tab under Insights. This webinar is being recorded. It will be posted online underneath the Events tab. The URL is sent around to every registrant, and all of the recordings are found on the GRESB YouTube channel. For questions, you'll see down below in the Zoom, please use the Q&A function at the bottom of your screen. We will collectively monitor these throughout. There's the potential that some of my friends in Amsterdam are also viewing this and could also jump in and answer those questions. ESG means business, 6th edition. This will be published to start 2022. IREI is set to print it in mid-December. And so if you're interested, remind your communications team that you should reach out to IREI if you're interested to reserve some advertising. Tremendous thanks. Tremendous thanks. This is event number 15 out of 17. Australia was done in person. China, are you guys all sitting down? You ready for this? 360,000 people viewed the GRESB China results event. I mean, whoa, long story there, but it's true. Latin America, lots of ESG energy happening down in Latin America, and we're going to close it out this year with Japan at the end of the month. They are doing a great job when it comes to ESG. Sasha, Anna, Alex, all of our GRESB colleagues, we really thank you. We couldn't do it without you. Really, really good job on the event season this year. Time for a little math. I'm confident everybody who's tuned in today can spell ESG. So let's try the math. Let's start with 3. 3 themes dominate the GRESB 2021 results. I can't even do the math. 3 themes: climate, COVID, carbon. Climate, COVID, carbon. We're going to hear a lot about these 3 themes today during today's session. But next, we have some more math. What do these numbers have in common? 2,926, 423, 8.1346. Those are the number of days, weeks, and years until the first day of 2030. So let's put that in perspective. Less than 3,000 days, 400 weeks, a summer and a fall, 8 years. COP26 concluded this past weekend. All eyes are on 2030, 1.5 degrees Celsius. What's your path to 2030? It's not that far away. Alex, we've got an audience poll. Can you bring that up? Can we see this? Excellent. Okay. The poll is untitled, but it is super important. What is your reaction to last week's COP26 agreement? Choose one of the above, right? Great show, problem solved. COP26 agreement offers a balanced, pragmatic approach for incremental progress, which is better than no progress. Any real climate solution requires credible carbon markets and proper pricing signals, hopefully coming soon. So many 2050 promises, so little time until 2030. Capital market investors who are focused on transition risk will determine the real trajectory of phase down versus phase out. Greta's got a point, blah, blah, blah. At least there's one point of consensus: all nations, industries, and companies must do much more. Is it just me, or is it getting hotter in here? I've not consumed enough information is the last potential answer. Please do this, and we will check in at the very end of the program to tally the answers. So Sarah Welton from Longevity Partners, welcome to the GRESB 2021 America's Results event. Let's get started. Let me just give a little context here on Longevity Partners. UK, France, Netherlands, Germany, Japan, now in the US. 75 experts in sustainability. A Longevity Partners board member was one of the original group members that founded the CREM project, Climate, COVID, Carbon. Sarah, are you out there? Can we pin her to the screen? How do these three themes resonate with you as GRESB Global Partners? Give us the longevity perspective.
Yeah, no, can you see me? Can you hear me? Okay.
We can hear you. Go ahead.
Awesome. Awesome. Well, it is really lovely to be here. Thank you, Dan. I can see you, and I'm, yeah, there we go. There we go. Right. Awesome. Thanks. Well, yeah, it's lovely to be here. And, you know, you and I have been working together for many years, and I think that the conversations is certainly evolving, and the climate, COVID, carbon, it certainly resonates. The past couple of weeks, I've actually been out of the sort of traditional GRESB audience, and I've been at NACREIF, and I'm literally sitting at the IREOC conference, and it's a receptive audience, but they're still in that very traditional paradigm of sort of that what's my EBITDA, what's my NOI, and they're focusing in on the financials, which is great. But they are a receptive audience to, what is coming. And so I raise your triple C with a triple D. How about that? I say data, disclosure, demand. What I mean by that is, there is an obvious need for more data. People need to be tracking what it is that they're doing. They need to be doing those energy audits. They need to be sort of steering the ship internally to understand even what's going on. So we do need to do those internal audits. We need to have that transparency. We need to set those KPIs. The disclosure, a piece of it is GRESB, absolutely. Keep up the good work. And Ben Watkins, my colleague who heads up our GRESB division, reported to me two pieces of really good news. 53% of our submissions scored their highest to date this year. And 93% improved year over year. So with our support, but that's not enough to demand. And this is where I'm sort of getting ears perked is, what is going on in the market? I have to respond to climate. I have to respond to carbon. I have to respond to COVID, but I have to respond to what my investors are demanding too. And many of our clients are demanding CREM compliance. They're demanding that they report to GRESB. So just staying on your toes and not being caught, flat-footed, and being ready to turn, to shift, to pivot to whatever it is, what is your human capital demanding these days. So I see your triple C, I raise you a triple D, and I think we're both heading in both of these conversations are heading in the right direction.
Well, I think you just set the pace for 2022. Remind us the 3 Ds. Data, disclosure, demand. Excellent. All right, we're going to carry those into 2022. You probably start hearing those from me, if I may. Is that all right? I hope so. Awesome.
Yeah.
Tell us about BREEAM.
And we'll keep the conversation going.
Cool. So tell us about BREEAM. It's a rating system. It was originally started in the EU, and I think it was even before LEED. And they kind of looked at that and said, "Oh, let's make this right. Let's kind of build on this." Is how LEED got started. So tell us about BREEAM.
Yes. BREEAM has been around, longer than LEED. And Brianna correctly, chatted me that it's been in the U.S. longer than longevity, and it's been in the U.S. since 2016, to the best of my recollection. But yeah, it's been operating globally. I think the actual BRE has been in operation for 100 years. So they've been really leading this research around building sustainability. But the good news is, again, they're sort of fitting into this data, disclosure, demand conversation. They are providing, particularly with BREEAM in use, which we will deliver some good news soon about US BREEAM in use projects. They're fitting into that data conversation. So they're helping projects and they're helping teams track what's going on site. And then the disclosure, it fits perfectly into GRESB, and it fits into, perfectly into the BREEAM certification, that is, fits perfectly into this public disclosure, and it provides third-party evidence, third-party assurance of the performance of the asset. And then it also is shifting to meet what is the changing demand. These standards evolve. BREEAM is not the only one. BREEAM has evolved over time to meet the current demand of the market, of investors. And again, we have investors who are funding projects that demand that they meet certain BREEAM thresholds, essentially, whether it's new construction hitting excellent or outstanding, and being compliant with BREEAM in use, or receiving the BREEAM in use certification also.
Are there property types where it shines?
It's applicable to all property types. And I think that, again, we've seen it with office, we've obviously seen it with retail, but the one to highlight, which I think we're getting a lot of sort of confusion in the market, but there is a solution, is industrial. And we've got some really good news coming online over the next several months with many of our clients based in the United States that are utilizing the BREEAM in use standard for their industrial projects. Because there can be some, there is some perception that there's some rub there, but it's a perfectly applicable standard.
It's difficult to get the data. That's really what the challenge is with those triple net lease properties. So we'll stay tuned and tuned into what's happening with BREEAM. Okay, so I was going to ask you for a tip, but we're going to hold this. Let's see if we can circle back at the end and kind of take in. You're going to help me, right? Close this and take notes from everybody, because we've got this great lineup. So I'm hoping you're going to stay with us for the duration. I know that you're at a conference right now. Is that all right?
Yeah. I am, but Dan, you couldn't get rid of me if you tried.
Awesome. Good. Well, that's excellent news. And so thank you so much, Sarah. Really appreciate you being here with us. And so before we get started with today's special guest, I want to turn to my colleague, Alex, and see if we can bring up the slides. And so, oops, hold on a moment. Okay, there we go. All right, so as we're getting started here, GRESB was started 12 years ago by a small group of highly thoughtful institutional investors in the Netherlands. That's where GRESB is headquartered. These asset owners, each with hundreds of billions of dollars at stake, wanted something. They wanted better. Better management teams, better investment quality, better risk-adjusted returns, and better outcomes. 12 years later, we've collectively moved the industry forward on a massive scale. These three founding institutional investors now number close to 150. The benchmark participation has gone from 200 to over 1,500 funds worldwide. And the real estate assessment became so successful that a subgroup got together in 2015 and created the GRESB infrastructure assessment. GRESB reflects the global institutional investment industry. The 2021 benchmark results reveal the state of ESG for the real asset sector. And so for any questions that are coming in, hopefully one of my GRESB colleagues may be able to answer them live. We'll try to weave them into the conversations that we're going to have with our colleagues and panelists, or we'll circle back post-event. So Alex has been moving the slides forward. We referenced this investor-led growth. So back in 2010, there were three, the original three, APG, PGGM, and USS. And that prompted the original ESG DDQ, due diligence questionnaire. They commissioned some academics to come up with an ISO 14001 approach: plan, do, check, and act. In 2015, a subgroup, as this group grew to be about 100 at that time, a subgroup got together and they created the GRESB Infrastructure Fund and Infrastructure Asset Assessment. This proved to be a great idea. We also launched the public disclosure grade for listed companies, and more institutional investors piled in. We're closing in on 150. I'm hopeful that we can get there by the end of the year. Let's see on the next slide what this group looks like. This is just a representative sample of them, big names, lots of dollars under management, and lots of clout to move the industry forward. That's really what drives GRESB forward. And so on the next slide, you'll see how this has taken place over time. 200 participants in the first year, 1,520 in 2021, 24% increase. And so what I take from this was slow and steady growth over the last decade as we were doing the sort of early adopter stage. And now look at the slope of that line, 2020, 2021, strong growth. Let's go to the next slide and let's see how this is playing out in numbers. Half by numbers out of the EU, right? 1,520, roughly 780 out of the EU. But if you look at the capital under management, $2.1+ billion, excuse me, trillion, that's a trillion. $2.1+ trillion of capital in the Americas in the GRESB benchmark, 117,000 assets, 66 countries in total, continues to grow. Let's see on the next slide. Here's what it looks like in Americas. So I really like this trajectory over time. We started off kind of slow, strong participation in Canada to really set us up to get into the latter half of the decade, and things are really starting to move forward and take off. Let's keep going. So we've seen where we heard from, keep going, Alex. We heard from Sarah that scores have increased in their client base and scores have increased throughout the board. So we saw in 2010, 11, 12, right, a nice climb, and then there was a reset in 2013. Things moved down, they moved to the right as performance and management were sort of more well-defined. And then a nice solid move up until 2020. And last year, what did we do? We broke management and performance apart more clearly so we could set the direction forward for the decade ahead. That caused a score reset, people's scores dropped, and here we are back moving forward again. And so scores are up basically 3 points. You can see on the 5-star to 1-star range. And remember, this is a mathematical construct. 20% of all participants receive a 5-star, 20% receive a 3-star, 20% receive a 1-star, which is great. There's a whole lot of people out there that are receiving a no-star, and they're having a hard time spelling ESG, and they've got perhaps some random acts of sustainability, but no program. So that's what this is all about. Let's go see on the next slide. Just for context, this is what's happening in Europe. And you see a wide distribution between countries that are leading and others that are moving up the chain. So that context sets the stage for what we see in Americas. On the next one, perfect, which is pretty tight, right? We see with Brazil and Mexico, they're just getting started. So the number of observations is relatively low. It's in the single digits. But we're seeing some strong leadership from north of the 49th parallel. For context, the US beat the UK by a point. However, the Dutch, they are running circles around the US, plus 11. So we've got a lot of work to do ahead of us. Let's move ahead. Key stats for Americas. We'll hover on this slide for a little bit. There were 366 participants, good normal distribution, but there is this crowding in the upper right. I've been talking about this since 2017 and 2018. Right, and more organizations are pushing up to the right into this upper bound of GRESB. Hence why we are pulling apart management and performance and doing this global engagement that I'll talk about at the end to reset what performance looks like. What I like is you would think that because it's mathematical, 20% should be 1-star and 20% 5-star, but look, it's dominated with heavier 5-star ratings in North America, 77 of them. Energy and water data coverage, north of 70%. We've spent the last decade really working hard to acquire this data that we hadn't tracked before. Energy, water, waste, greenhouse gas emission data. Renewable energy installed on site, over 6 million megawatt hours. GRESB scores right alongside with the benchmark. All right, Alex, let's move ahead. Value add and opportunistic. There are many portfolios that are showing up. So we're seeing a big trend over the past 3 years where this cohort has grown. Oftentimes people will come and they'll say to me, hey, GRESB, this is for the core funds, right? No, absolutely not. Value add and opportunistic are where financial moments of truth really matter. Understanding the where you're doing an intervention on an OPEX or CAPEX basis, understanding where the asset is, knowing what you've done has led to positive outcomes. That's exactly what the value add and opportunistic strategy is meant to do. And so we're seeing the leaders really emerge, embracing ESG and reporting and data management on value add and opportunistic. It's the same distribution in the US as it is in the EU. There's some leaders scoring 5 stars in the 90s, And there's some laggards that are moving up as they mature their portfolio. Go ahead. 3 observations. Let's keep going. So the first one's on net zero commitments. We're seeing many, many more in the benchmark, and this is for North America, coming forward with targets and net zero commitments. So the dark green is 20. This is the number of entities in North America that have a net zero commitment. So you'll see back in 2019, there weren't a whole lot. We were just getting set. We're moving ahead on targets. Should we do this? How would we do this? Let's talk internally. 2020, 2021, those numbers exploded. And so we're seeing still tepid targets, 142 or somewhere north of 2030, but more and more net zero. We've actually seen net zero portfolios in the United States come into the data set in 2021. Let's go to the next slide. The evolution of this, what's interesting is, it's a pretty solid 25% don't have targets, but you have to take that in context. If you look at the N and how the N has grown from 964 in 2019 to 1411, some of these are on grace period, so that's why they don't show the full 1520. 25% don't have targets, typically the new participants within GRESB. More and more, look at how net zero has grown. It's doubled and nearly doubled again between 2019 and 2021. Go ahead. Regional comparison, Oceania, they're out front. They score the best in GRESB. They've been focused on this issue for a while, and they are setting aggressive targets. 25% have net zero, 60% have something not quite net zero, but close. And only 14% are trying to understand this within the context of their business and their organization. Over in America is 10% with net zero targets, 34% kind of talking about it internally, but good solid growth, kind of on par with Europe. Go ahead. Here's what this looks like graphically. When you tally up all of the participants and what the slope of their line looks like, unfortunately, the US is the top line, where it's slow and steady downward. We're not hitting a net zero by 2050 for sure. Whereas in the red box, 2030 is highlighted. We're seeing the Australians that are aggressive on this topic, moving in that direction rather aggressively. Go ahead. Third-party data review. Sarah talked about this and how the importance of data and the quality of data has really emerged. So there's the opportunity to check the data, you can verify it, you can assure it. There are 4 credits within GRESB where this becomes relevant. And what we're seeing is this graduation of organizations having their data third-party checked, moving along the line to verified and assured. As the benchmark has grown, there's certainly people that are not third-party verifying the data, but you will imagine that this trajectory to check, to verify, and assure will be part of their path and their pathway of progress through the GRESB assessment over time. Go ahead. From a regional comparison, on the left is the Americas, on the right is Oceania, with Europe and Asia in between. And so here in the US, we assure the data at a much lower rate, but we're doing a good job of checking and verifying that data. So we have really good coverage. It's very difficult, or it seems like it's difficult in Asia, so they're lagging on that. I think that there's some good assurance firms in Australia, and folks have been working hard to have high quality data in that section of the benchmark. Go ahead. Want to end with a couple things. Our GRESB team has been hard at work to elevate this data and make it as even more useful to our participants. So Alex, go ahead. We'll see that we've got this transition risk report that's coming out in December. It's built around the CREM pathway and the Net Zero Asset Owner Alliance. So the data estimation on GHGs for the missing data will be part of it. And you'll hear more about this from our newsletters in the following month. Go ahead. For those that participated in the resilience module in the past, we sunset that and we integrated it within the GRESB assessment. And now we're able to elevate those cues within that are scattered about the 60 odd questions into a TCFD report. You can benchmark your progress against peers, communicate your readiness to institutional investors, and identify those gaps and continue to work your program to make sure that you're aligned with TCFD. And then finally, SFDR. SFDR is the Sustainable Finance Disclosure Regulation that's coming into effect in the EU in the second quarter. I think, well, maybe the first quarter, end of March, I believe. And so there's an awful lot of people in the EU that are looking for metrics within their downstream institutional investment portfolios. And so being able to satisfy those inquiries with high quality data and also benefit from sophisticated estimations is what the team has been working on. So this is also coming out to coincide with that. 2022 is kind of get ready for it. In 2023, these regulations really come into effect. I want to close by talking about the assessment roadmap. And so you've seen some communication if you're a GRESB member on what performance means and how we are collectively with our membership base around the globe, redefining what performance means on a roadmap, a 5-year roadmap to 2025. So we're in phase 1, defining that joint vision. Surveys have gone out, and we're going to republish those in December, moving into phase 2 and phase 3, which is really our collective work in 2022. Create that strategy and then define the technical requirements, which will be the most difficult part. So we look forward to having working groups and engaging all of you in this because you all have tremendous feedback to provide. We're all ears. Okay, and so with that, I've seen some questions. I will look to see if I can answer some of them. But before I do, I'd like to bring Fulya Kochek, SVP of ESG and a tremendous partner in progress at NAREIT, the National Association of Real Estate Investment Trusts. So Fulya will be our first guest today. And just to provide some quick context while my colleagues are going to pin her to the screen here, NAREIT is the worldwide representative voice for REITs, both listed and private, as well as companies with an interest in US real estate and the capital markets. NAREIT's CEO, Steve Wexler, was an original GRESB Board of Director member, and they have a long-standing ESG award program called Leader in the Light. This combines a GRESB score with a few additional questions that are required, and that's part of the submission process for all the REITs in the US. And so, Fulya, it's such a pleasure to have you with us to kick off this 2021 GRESB Americas event.
Thank you so much for having me, Dan, and congratulations to you, to GRESB and the real estate community. Great progress. Very proud to see what have been done last year, and I expect to see many great things in 2022 as well.
Well, it's a team effort, and certainly you've been doing a lot of convening with whether it's the ESG forum that happens in January, sort of the jump start, where you talk to folks about what's happening in ESG and all of the, I know we call it the alphabet soup sometimes of reporting standards, and this particularly for the listed companies, right? And so then you have REITworks in the summer and the REIT World in the fall. So give us a sense with all of those programs that you put on, so what's been the arc like in the listed side, say over the past 5, 6, 8 years?
Well, I joined NAREIT a little over 5 years ago, and it felt as if the time passed really quickly, but at the same time, a lot has happened. When I first started and asked the question, how can we help? What's going on around ESG? What are some pain points? The biggest, conversation was around the alphabet soup. It just was very confusing. The questions were more like, what ESG framework should we use to report on? What are some of the metrics we should focus on? So that there was so much going on. It was very noisy. And there wasn't a clear understanding of what investors wanted to see. Because I think even many of the investors weren't very clear on exactly how to evaluate ESG performance. So that was 5 years ago, and we tried to make sense of it by publishing a number of studies and research around this, and we can talk about that later. But fast forward 18 to 2 years ago, things start to change. ESG evolved quite quickly during the pandemic. You'd expect that the focus will sort of move away from ESG, but it was the opposite effect, that ESG became even more important. I think we started to have a little more clarity on the priorities around different areas of ESG. And now it's more of a conversation about, okay, we have to disclose regardless. Public disclosures are important. So that's like a check. And then just every company has to identify their own priorities, but there are a number of things that are critically important for all real estate companies. Starting with climate change, I heard your 3 C's. I'll just call it climate change, including the carbon aspects, both mitigation and resilience efforts, adaptation. We know with the social side, the diversity, equity, and inclusion, not only doing the right things, but having a program around it, having actual metrics that are measurable, that are benchmarked and accounted for year over year. Human capital is huge for any public company at this time. And on the governance side, I'm speaking more from the ESG governance side, being more accountable on the ESG side at the C-level, board level, the board level commitment. We see more and more board level ESG committees being formed. So those are some of the changes since the earlier days I got involved, and I think there's still more to be done. But I think with ESG evolving very quickly, one other thing I have to add as an ESG professional is everyone I speak to, and probably most people on this meeting listening to me with an ESG role, we were busy in the past, we're busier now. I think that the importance of ESG is growing. Our teams aren't growing as fast. So I think there's also that trend of being exhausted as ESG professionals. But I think that's a good problem to have for now.
Well, thanks for giving voice to that. I think that I know a lot of people that would agree with this. One of the things that NAREIT publishes is an ESG dashboard. And some of the folks might know that this dashboard was created in partnership with one of GRESB's co-founders, Dr. Nils Koch. And so I took a look at it last night, and it's really amazing to see that every metric that you're measuring on this dashboard is going up and to the right. Do you think, is it possible that that momentum can be sustained?
Absolutely. We're in the 4th year of the ESG dashboard. We started with benchmarking our 100 US equity REITs. That's based on the market cap. So the 100 US equity REITs, that's usually equal to somewhere between 90 to 95% of the market cap. And since we've started to measure progress under different ESG metrics, this is based on public disclosures. We've seen progress in every single area. I think it will continue. Actually, we're looking at adding more metrics that are more sophisticated than just are you disclosing on carbon. So I think there will be additional metrics that you'll see new progress. We'll benchmark them this year, but I expect this to keep growing until it hits the 100%. Right, that's the hope. Yes, I do expect to see that, and we'll see some of the new metrics that are more advanced as well. Then I think we'll just start tracking those in the coming years.
So the ESG Jumpstart program, this happens in January. And last year I saw there were roughly 80 firms that were represented there, which is amazing because I remember back, 4 or 5 years ago, where getting 30 people in the room was great, and it was all the veterans and whatnot. So now where there's all sorts of new folks that are coming, and they're not just the ESG folks, investor relations, other areas within the firm are become quite interested in ESG. And then fast forward to REITworks, which happens in August. And I was looking at the agenda items, 8 of the 12 are focused on ESG. And so the conversation seems to have percolated not only within the ESG, which is always a silo busting exercise anyway, but there's more and more organizations that have people in their companies at a high level that are interested in this. Has that been your experience, and kind of what do you see how this will evolve going forward?
So just a quick correction, 80 REITs, that was the year before. We did it virtually last year. 110 REITs showed up. It's a pretty incredible number, and an interesting thing that happened. I really was surprised in a good way, I guess. More than half were executive level people, VP or above. So the interest started at the ESG professionals level, at entry level. But now we see various different disciplines coming to learn, from general counsels to heads of HR, IR folks, and of course ESG folks as well. And the people, they come the next year, they send someone else. So we're seeing company-wide, interest in learning more about ESG, because now ESG is everyone's business. So as ESG staff, you're not the only one who needs to know about it. You're the one that's the point person that you strategize, but you can't be in a bubble doing your own thing in your little sandbox. all other departments, they have to work with you. So we've been seeing a lot of that during our events. A lot of different disciplines are coming to the events, and they are also becoming very sophisticated that that when we have ESG discussions, people like me, we don't need to train anymore because we are speaking almost the same language in many ways. But at the same time, as ESG professionals and others, there are new things to learn. I'm sometimes overwhelmed because there are so many things I have to read, I have to learn, I have to be on top of. So we'll need to do more of the jumpstart like events so that we stay on top of what's going on, the trends, latest framework updates, concepts. So I think we'll continue to do these convening events so that as a community, we stay on top of this. One other thing I want to add, the Jumpstart series is going to be happening again at the end of January and early February. We'll have 8 sessions during the midday period, 90-minute periods. We are opening it to all real estate community. So I just wanted to announce that before it was member only, but we're putting it out for the real estate community. If folks want to come and learn, this is more of a workshop that's educational. This is not a conference, it's step-by-step talking about various ESG topics.
Well, that's awesome. There are so many very knowledgeable people at the REITs who, come to these sessions, even though they've been veterans and working at their firms for 6, 7, 8, 9 years and have really matured, right? They come as well and they share. It's a very collaborative environment. And I think that theme sort of drives through all of the guests today. So awesome for doing that. So 2 more things. One, let's go back to the 3 C's: climate, COVID, and carbon, right? How do you see the ESG conversation, if you will, that's become more sophisticated with the listed companies kind of evolving when it comes to those, 2 or 3? Obviously, COVID's back to work. Maybe it's a little bit of the S, which we'll close on, but physical risk, transition risk, and how does that resonate?
So I think with the look ahead, we had the event that you mentioned with our Leader in the Light award winners, and I asked this question to them. Okay, what is the look ahead? What are you looking 2022 and further? And what does your strategy look like? And many of the winners mentioned a few topics that I'll try to summarize. Transition to net zero, having a pathway, because it's not simple. So I'm not saying that they are saying we'll be net zero next year, but a plan, a strategy that showcases how we'll reach there. Definitely climate change is huge. This is not a trend. This is an organizational importance. It's not an ESG. I'm going to take it out of the ESG framework. Climate change is all about businesses and their survival at this point. And it can turn from a risk to an opportunity if done correctly and smartly and timely. So I expect all companies, not just real estate and REITs, to focus on climate change. But as you can imagine, for real estate, physical risk is so real. So I see more of that happening, more scenario-based analysis, strategies to offset the risk. Definitely on the S side, health and safety. With the pandemic, I think there was a huge interest in healthy building certifications, but I expect to see more excitement around health and safety, health and wellness for indoor spaces and buildings to continue. And of course, DEI, human capital, all these aspects will continue to be key upcoming efforts as well.
The S is hard. The S is really tricky to measure, monitor, and maintain over time. So that's like the perfect close and the perfect segue to. So first off, Fulia, awesome. Thank you so much for being part of the GRESB 2021 results event, and for all you're doing with the Jumpstart program and other things for 2022. I think we heard the C's are going to move to the D's, right? Data, demand, and disclosure. I'm probably got one of those wrong. So let's keep up, and thanks again for being such a great partner in progress.
I appreciate that you included me, and I'll come up with some letters for the next time. I didn't get the memo, sorry.
Well, it wasn't a memo. This was kind of showed up in my text this morning. So I don't know, maybe we need to start working on the E's. The E is a hard word.
I'll come up with something for the E's. Thank you so much for having me.
Thank you, Fulia. Tremendous. Okay, so let's shift. Let's bring on Zoe Hughes, who's the CEO of NAREIM. NAREIM is the National Association of Real Estate and Investment Managers. It's the private equity side. Zoe, welcome to the GRESB 2021 results events.
Thank you so much for having me here. Really appreciate you inviting me.
let me give some context for the audience on Nareem, because you've got such a great organization, right? You're offering this special approach to the industry collaboration, which I think is like I said a moment ago, it's the theme that drives through all of these industry associations, but you do it in a very special way, right? So it started over 30 years ago, home of the real estate investment management best practice. And, it's through peer-to-peer workshops and driving process and strategy and getting organizations not only to evolve, but also the professionals in those organizations to evolve. And I think that's a really important construct when I think about ESG and the folks that you convene with those meetings. So can you give us a flavor for how you've seen the ESG professional grow over your tenure at Nareem?
Oh, absolutely. And one thing I do want to kind of echo is what Fulya said, is this is not just ESG in itself. This is cross-functional. This is really embedding across the entire firm. This is C-suite. This is architecture and engineering. They're executing on ESG. This is asset and portfolio management. This is ESG. This is capital raising. We're seeing exactly what Nareem's seeing, is that there are not just ESG professionals coming into these discussions. It is across the entire firm. And it's really interesting to kind of see that growth. So, let me just kind of take just a little bit of a step back and just kind of just say, where we come at the industry in Nareem, obviously we're an industry association nonprofit. We're about the business, we're about the organization. So we absolutely touch on the topics of climate risk, net zero, decarbonization. But where we do try to look at is in the organization, those conversations about your process, that day in, day out work, getting into the weeds. And I know one of the things that we have really kind of seen, and we do track actually this data, you talk about the maturity of the professionals in ESG, and we actually do track that growth of dedicated ESG professionals. So we've actually been tracking this since 2017. This is part of our global management survey. It's one of 4 benchmarking reports we do. And it's been fantastic to see. So like in 2017, we saw 29% of firms had a dedicated head of ESG. You look to 21, the report that came out this year is 38%. So 31% increase in 5 years. It is an astounding growth, but there's still a huge way to go. You actually look to the 21 report this year, again, 45% of firms have an ESG committee. So you are seeing sustainability, you're seeing ESG kind of embed, but I go back again to what Fulya and myself said, this is cross-functional. This is not just one group, because, who's buying into this, who's executing on this, who's leading these initiatives. This is absolutely across the board. So it's been fascinating to kind of see, how real estate investment management firms, the private firms, actually kind of address this. So, and it really is coming up across all of our functional group conversations. And we represent 10 functional groups within an investment management firm. So we're really seeing it come up across all of those meetings.
Well, that must really impact your programming, right? Because if I recall, this sort of started with the architectural and engineering group, where they were sort of geeked out on this whole sustainability idea, and now it's like a free-for-all where it's on everybody's agenda. Yeah. So how does that like affect your planning and your organization for upcoming meetings?
Well, let's say the members obviously drive the content and the action, and we saw in 21, 4 of our meetings actually had climate risk and net zero as part of their content. They want to understand more. But obviously one of the things that I do want to kind of stress is that not all firms are the same size. They don't all have the same scale. They don't all have the same resources. How you are, your scale, your staffing, you could be an asset manager and running ESG at the same time. You don't have the same bandwidth or the same resources to do the same things as someone with 2 or 3 members of a dedicated ESG team. So we're always really mindful of that, and the members do really shape the content, but some of the conversations we've had, which I think are really interesting, this is not just about the topic, it's how are you looking at these issues? How are you looking at, let's pick on climate risk. How are you looking at climate risk and applying that back? This was a big topic this year, actually across the board for all 4 of these meetings. And it's, how do we embed climate risk into the current processes? How do you balance the fact that climate risk data, which is forecasting 30, 50 years into the future, how do you balance that against a 10-year discounted cash flow model? What do you do? Some of our members were coming back, is it terminal cap rates? Is it credit losses? How are you budgeting for CapEx related to climate risk? How do you backtest climate risk data? And this is the big one, how do you incorporate this data into acquisitions, into underwriting? At the minute, it's informing, probabilities of risk, but it is not there on the deal side just yet. The data's, you go with multiple providers, you'll get different data back. It's really in its infancy. And one thing, we were looking back at some of the key takeaways. And one of the things that is really interesting, and this is a in the weeds, day in, day out process. When you do climate risk, how long is your contract with a data provider? We did a poll of our members and 86% said 1 year, because this is so new. How are you doing it? How are you looking at it? That's what we're trying to do at NAREM is peer to peer, manager to manager, going, what are you doing? What's working? What's not working? That's a great idea. I like this. Let me take this back. And irrespective of scale, we're all learning, because that's what I think ultimately ESG is about. And that's what COVID has really reinforced: collaboration. We need to share. We all win when we share these ideas and we collaborate on these thoughts. When you learn what didn't work for someone, that is invaluable, just as much as when you learn that something does work. So I think that's been one key takeaway. And as we kind of look to 22, that continues. Where can you have that safe space to talk and go, okay, how did you deal with this? I got this problem. How did you deal with the other? So
I took a look at your sustainability committee. It's amazing. You've got Mona Benisi from Morgan Stanley as the chair, and then Jill Brosing and Uma Paterkine from Center Square as the co-chairs. And so you've built a powerhouse, and I would imagine those are really robust conversations. Very, very well done.
Thank you very much. No, and it is. It really is. We all, and this is the one thing that there is no ultimate secret sauce here. We're all learning. We're all learning together, and where we can share those ideas, we all win and we all advance. We all have to do ESG. It is absolutely critical to what we do. As Fully said, this is about the business continuity. This is business development. This is how you grow your firm in the future. Because if you're not doing this, are you raising the capital? Are you attracting and retaining talent? This is a C-suite issue as well. This is not just ESG as a silo. This is across the entire firm and about the growth and scaling of businesses as you look ahead. So
perfect segue. Let's kind of wind up on DEI, because I know that this has been a passion project of yours, and you've worked very hard to bring pretty much the global industry associations together on this. So give us a flavor. Tell us about what's going on.
Okay, so DEI, obviously diversity, equity, and inclusion, however you want to mix the words around, but we've actually tracked DEI since 2017. So it was part of our compensation benchmarking report. And in 2020, we pulled it out as a standalone survey. So this is a corporate benchmark it was just originally for real estate investment managers, tracking gender, ethnicity across seniority and job functions. And it really is an organizational benchmark. How are we doing? How are we tracking? How do we track progress? As we look to the growth of the survey, one of the things that we really wanted to do, and I think this is the holy grail of commercial real estate and our entire businesses, can we come together and agree there's just one way to report corporate data on DEI so that we can actually spend more time executing on diversity rather than just data reporting, so we don't have to spend so much time filling in multiple surveys or DDQs or RFPs that are asking just in a slightly different way for the same data. This is HR, this is talent data, this is employee demographics, this is seniority, this is job functions, this is not secret sauce. And so one of the things that we really wanted to do as NAREM, but also as the community within the associations, was just really to try and bring people together to say, look, for all of our members, for the industry, let's really kind of see if we can come around just one way of kind of reporting. So we are truly excited that ANREV, INREV, NACRIF, PRIA, ULI, RealPAC have all come on board. We will grow this as we look ahead to the future, because this is to create, obviously, a commercial real estate view, but within that, we'll also do real estate investment management, construction and development, architecture. So as we can grow this over the coming years, we will have industry-specific benchmarks, but obviously that commercial real estate view, because you need a line in the sand. You need to know where you start so you can track the progress. because then once we've got that, we can really look ahead to the really hard things, the recruitment, the retention, the training and the development. That is huge. There is so much to do there. Let's just kind of push ahead on the data. But I've got to say huge thank you to obviously Greg and Michael and obviously all the other associations. It is amazing to be working with them on this as well. So.
Zoe, amazing leadership, another partner in progress. Thank you so much for, it's clear that your passion's on display. So always a pleasure. I know the last time we saw each other was at IREI VIP Americas back in 2020. Seems like forever ago. So
it does. We need these in person again. So
perfect. Well, you brought up Greg McKinnon at PRIA. He is the director of research at PRIA, the Pension Real Estate Association. And for those of you that don't know PRIA, it's so critical to the worldwide institutional real estate industry, right? They're a convener of issues between the LPs and the GPs. So Greg, welcome to GRESB. How are you? We've been trying to get you on as part of our program for years. Great to see you.
I'm very pleased to be here, and I'm glad I could make it this time. And it's a pleasure to be here.
Give us a sense for how the ESG conversation has kind of moved ahead at PRIA, because the LPs, they've been driving hard through GRESB, right? But it does feel sometimes like it's been an EU phenomena. We are seeing a lot of momentum here in the US. What's been your perspective on this?
The conversation around ESG in the US has changed dramatically over the last few years. Just as some background, PRIA is a global organization. We have a global membership, but predominantly North American, and especially the US. And as you said, the Europeans have led the charge on environmental considerations in real estate investing for a number of years. GRESB came out of Europe. And basically, even 5 or 6 years ago, if we had featured a panel on ESG at one of our major conferences, it might have been a great panel, but you would have had a small group of people in the front row, very dedicated, very interested with their notepads out, taking notes from the speakers, and a lot of people checking their emails or going to get a coffee and seeing who they could talk to in the back room. That has changed dramatically over the last 5-6 years. Basically, now you can't hold an industry event that doesn't have a significant portion of the agenda dedicated to ESG. It's what people want to talk about. And that's not, from PRIA's perspective, that's not the PRIA staff in a back room somewhere deciding what the industry should hear about. All of our agendas, whether it's for our conferences or our magazine or anything else, that's driven by what the members are telling us they want to talk about and they want to hear about. So it's an entirely different conversation right now than it was a little while ago in the US. And it's also far more detailed. A few years ago, it was okay if you're an investment manager just to have some boilerplate language on your website saying, ESG is central to all our investment decision-making or something like that. That's just not going to cut it now. Investors want to know exactly what you're doing it, how you're doing it, how you're measuring it. That data thing comes up again. What progress are you making? Are you involved with GRESB and other similar organizations and that sort of thing? So investors have detailed questions, and I think from the investment manager perspective, there's been a realization that this again, it's not a trend towards ESG; it's a movement towards ESG, and this movement is something you either have to get ahead of or you're going to be crushed by in the end, because not only are the investors interested in it and demanding more information and more action from the managers, but there's a growing realization that the tenants in the buildings care about this as well. So the actual demand and the rent growth in your buildings is going to depend on you being able to show that it's a environmentally friendly property.
You brought up PRIA Quarterly, one of the publications, and then you're also involved with the Journal of Portfolio Management. I was taking a look at some of the titles of the recent publications. In portfolio management, that's much more academic, researchy, but I'm seeing articles on resilient real estate and climate risk and real estate pricing showing up in that journal. And then on the PRIA Quarterly, which is the curated conversation by the members, what do we want to talk about? Right, the needs for a formal ESG program, shades of green, sustainability leaders insomnia, which is my favorite, right? Top of mind challenges and the quest for net zero. What are you seeing as the themes right now within the PRIA membership base? So we'll talk about that, and then I want to shift to the awards and how you've been recognizing leadership.
Yeah, so the last issue of the PRIA Quarterly was actually dedicated to ESG. And again, this is not us trying to push it on people. This is our member committee coming to us and saying, we have to have an issue on ESG. And there's a number of different topics that people want to talk about. A lot of them have been mentioned by the other speakers already. You know, net zero commitments are a big issue, and you showed graphs of the the growth in that. But there's a special interest in discussing, what exactly is net zero. There's various definitions of it out there. So what definition of net zero are you committing to, and the credibility of the commitments? I mean, it's no longer okay to say, I commit to net zero by 2050 or something like that. The same way that I commit to losing weight every year and it never happens. I mean, people want to know, how are you being held to account for this commitment you're making? And there's also a regulatory move towards, holding people to account and what they say. The greenwashing thing doesn't cut anymore. Other things that, specific topics people are talking about, Zoe mentioned measuring climate risk. That is becoming more and more important. People for years have been talking about the importance, but now they want to know, how do I measure it? How do I incorporate this into my investment decision making? The social aspect of ESG is important. And as you mentioned already, Dan, the S in ESG is a little bit more amorphous than the E. I'm not saying the E is easy to do. It's not easy, but at least you kind of can measure it theoretically and you know where you're going. There's a lot of different aspects to S, and people are still wrestling with, what is the S exactly? DEI is obviously an important component of it, but it's not the only component of it. So those are some of the general topics that our members are wrestling with, and we're trying to provide information.
Well, it's so cool that you've gotten together with Zoe and all of the folks around the globe to really hone in on this S stuff. Let's shift and let's talk about this award program that you've put together. So in the spring, it's for the investment managers, and in the fall, it's for the LPs. How did that go this year? Last year was, I think, the first time, right? Or this year, it's this current calendar year.
Yeah, we're very excited about this fairly new ESG award program. So 2021 was the first year they were awarded in. As you mentioned, we have two streams, one for funds, so for the investment managers, and then one for institutional investors. So we awarded our first real estate fund awards in March of this year at our conference. I will thank many of the people on this call today were part of our judging panel, including yourself, Dan. So thank you again for doing that. We had a tremendous response to that. You're always worried when you first start something like this, is anybody going to care? Is nobody going to submit? We had 59 different funds submit for our first ever fund awards, net assets under management of about $192 billion altogether. So great response. Just very quickly, I'll mention that an open-end fund run by Hines won the open-end category. A multifamily fund from GID Investment Advisors won in the closed-end category. Green Cities Fund 3 won our Momentum Award to recognize innovation. And we do have an emerging managers category, which was won this year by MDH Partners. The 2022 version is open now for submissions. So if anybody out there in the audience is interested in applying for our 2022 Fund ESG Awards, go to our website. You can put your application in there. We also awarded to the this past conference in the fall, we gave out our first institutional investor ESG awards. Ivanhoe Cambridge won that with an honorable mention to CalSTRS. So both organizations that have really driven the conversation in real estate investing in terms of ESG recently.
Greg, I'm so glad you brought up that the award is open. I just put the URL into the chat for anybody that's interested. I think it's open till December 15th for those submissions for next spring for the investment managers. This has been a great help to moving the industry forward. Recognition drives more recognition. So way to go. Thank you.
Yeah, and also just very quickly, I know you're running out of time. I'll quickly mention that the thing I like, or we like with Priya about the ESG awards, that it shines light on the topic overall. It recognizes leaders in the industry, but also by sort of posting these winning submissions for people to look at, it provides sort of industry leading practices for other organizations to look at and, perhaps follow or adapt into their own organizations.
It was super educational to read all of those submissions. So I really appreciate the opportunity, and I'm looking forward to doing it again next year. Now, I will say, Greg, I was catching something. I was catching a little accent in your voice, a little Canadian accent. And I'm hearing from my colleagues in Amsterdam that we have a special guest from they're coming in from Toronto. So hello, Toronto. Can you hear us? Toronto, are you out there?
Here's Toronto.
Oh, excellent. Michael Brooks, the CEO of RealPAC, Toronto's leading trade association. How are you, Michael?
I'm terrific. Thanks for inviting me.
I understand that you bring some great news.
Well, it's great news for Canada. That is, we beat the US in the GRESB results, which, I like to gloat on. even though we lost to the damn Australians again, a perennial issue, but actually I shouldn't gloat on this. We were very close, and there are a lot of key industry leaders in the US. So as Zoe mentioned, we all learn together and we all grow together.
Well, I think it was as close as that Summer Olympics beach volleyball controversy, where it was this close, but it was clearly out. And Canada has certainly triumphed over the US when it comes to their GRESB score this year as a collective body. And I look backwards, and GRESB is, or Canada's ahead 3-0 in GRESB over the last 3 years. So it feels like the US is going to need an ESG miracle on ice. I don't know.
Well, you know what? We're all coming up at the same pace. I think when I listen to Fulia and Zoe and Greg, we're all on this journey together. We're all sharing as best we can. And the pace of learning right now is incredible. Fulia mentioned the alphabet soup of ESG standards around the world. Zoe mentioned, at the operational level, people trying to figure out, how do I get to low zero, net zero? Greg mentioned, what is it? So we're all trying to progress at the same pace.
And I'm really liking your pin, your lapel pin for the UN SDGs, right? So you gave this great summary to kick off the Canadian event that we held 2 weeks ago. Can you talk us and give us an idea about the themes that are resonating in your country?
Yeah, well, the themes that are resonating are the ones I bring back from around the world. As you know, I was on the GRESB board for a few years. I'm now on the World Green Building Council board. And it's really important for me to understand what's going on everywhere, because I bring that back. Something I also mentioned, Dan, at the Canadian event was I've completed this ESG Competent Boards course. I've completed with now Chris Kolink, my manager of sustainability, Climate Competent Boards course, because I want the multi-industry perspective. I don't just want real estate. And you get a different feel for the world when you hear, Shell talk, the board of that directors, or the CEO of Interface, or Novo Nordisk, or other global multinationals, Maersk, and what they're doing on shipping. You get a different vision for what real estate needs to do. We all know that we're 30 or 40%, somewhere in that range of the global carbon problem, but it's an issue that, this pin is part of it. The UN SDGs are the world's pain points. The social contract between business and governments and society seems to be changing. Private sector is expected to do more now, justify where we are in this society. And we all need to embrace that. Look at the UN SDGs as kind of North Star world pain points. But operationalize that. We've got to be good corporate citizens, and ESG are just 3 headings. We've got to be good corporate citizens. And even starting with the S, you may have listened in, Dan, to our Indigenous land acknowledgement at the start of the Canada event. We do that for all of our committee meetings because we have not treated our Indigenous peoples very well. That's the S. And of course, there are other disadvantaged groups in Canada, like anywhere else, BIPOC, Asian, LGBTQ, and that's certainly a piece of the puzzle. On the net zero part of it, Greg mentioned this. What's net? Does net really count? And when are we going to start talking about embedded carbon? If you looked at the CREM tool, that's already got some embedded carbon metrics in it for renovations to premises. So we're creeping into the embedded carbon world, which is another whole world of us to figure out for all of our materials. So bringing all this stuff back to RealPac is a challenge. As Zoe mentioned, and as Fulia mentioned, all of our members seem understaffed, with a few exceptions. You need a staff member to collect data and figure out, how do I get to net zero? What's a promise that I think I can get to, and over what time period? I might have mentioned, Dan, in the Canada event, a favorite saying, and this is a saying that I used in 2009, 2010, when people were making energy reduction promises. And it's from Alice in Wonderland. If you don't know where you're going, any road will get you there. That's the point about making a target. a net zero target, by when, and what are the milestones along the way, and figure out how to get there. But pick that part in the sand, make that line in the sand. I think that's really important. So there's a ton going on in our spaces. Everybody on this call knows, and we're just trying to learn as quickly as we can and translate that to our members as what's coming.
Reverse engineering net zero is super important. I think you just shed light on that. Totally with you there. The ethos of the Canadian market is on display with your comments, and you are the best. Thank you, Michael, so much for being part of our event today. Really appreciate it. I want to stay in Toronto, and I want to circle back and talk about ESG research. We've been talking about it a little bit with Greg at PRIA and others, so it's my distinct pleasure to introduce Avis Devine, PhD at York University School of Business. And so Avis, welcome. Thanks for being part of our event.
Thanks, Dan. Nice to be here.
You are, so many people are asking me for academic research. What's happening? Can you prove that ESG matters to these returns and whatnot? And I knew that you'd be the right person to sort of bring this up and give us the sort of state of play with ESG and academic research. So with that as kind of a wide-ranging backdrop, what's going on out there in academia world?
Well, let me start by saying that's my corner of the sandbox. I spend most of my research time focusing on the financial implications of ESG and sustainability, really thinking about asset level and corporate level. So a lot of my answers are going to be colored by that. There's lots of people working in academic research within the business schools that deal with this in other areas as well. They're having these conversations in strategy and policy and marketing and accounting. As well as, in real estate centers. But what I'm seeing mostly within the real estate area, and this is again colored by the commercial real estate area, whole nother universe thinking about housing and the impact that has. I'd say obviously climate resilience is a big part of it right now. And one of the key reasons this is so important is because we have a decent amount of work on real estate and climate resilience, but nearly all of it is on housing. And you can't just fully extrapolate the same outcomes by going from housing to CRE. So this is an area that we need more work on. And we're starting to see it bubble up right now. There's a piece that Rogier Holtermans and Nils Koch and Matt Kahn are working on right now that should hopefully be coming out maybe in the coming year. That is one of these sort of first groups of studies that dig into climate resilience of CRE and seeing what kind of impacts there are. I know they're particularly taken with some of their post-Sandy, Hurricane Sandy results. So that'd be really interesting. One of the things that I've been spending a lot of time focusing on is the market consumption of the GRESB signal. Because at this point, and Dan's like, that sounds like great research.
Well, I've also been part of the conversations that led to this research. So I nod my head. This is tremendous. Tell us more.
Absolutely. That work is really about understanding how the market is pricing both participation in GRESB and performance in GRESB. Because the whole point of GRESB at a basic level is to increase transparency into this. And we're starting to see conversations about at what level of the industry does GRESB become table stakes. And I think we're seeing that happening more and more, as we've talked about and has been hinted at by various people. This is a very different conversation by geography. And that level of table stakes differs by geography as well. And frankly, it differs by asset class. So we are seeing that sort of feed into the conversation. There's a lot of work that's trying to tease that apart. I'm working right now with Drew Sandiford and Chong-Yu Wang on a study that is re-funded, thank you, Greg, and also made possible through data sharing by GRESB and NCREIF that is looking at private equity real estate returns and the relationship to GRESB. And I can't talk about that too much yet, or Greg will shoot me. That's part of the terms of the grant. But more news on those results will be coming in 2022. And I'm particularly excited about that.
So a couple comments. Guns are not legal in Canada, at least as far as I remember. So that you're safe there. And for all the people that are tuned in that have been asking me about GRESB against the returns and the NCREIF and the open-end index, hope you heard that comment. Go ahead.
Yeah, we're going to be taking a look at the Odyssey Funds. And the Odyssey Funds are a really interesting subgroup because they have been moving, they've moved to full adoption of GRESB. Everybody who's on the Odyssey list is a GRESB reporter. And that unto itself says something.
Except that now there's clustering in the upper right. So it'll be interesting to see what you come up with and then where this goes over time.
Yeah, we do some work to sort of tease apart what is shaping those return behaviors as well. What part of the disaggregated return is being impacted or associated with GRESB. And then sort of staying within the capital stack question, a lot of focus on climate finance. And especially in light of COP26, this is what's in the back of my head. I don't get to answer the poll, it turns out, because I'm a panelist. I tried really hard to answer the poll, but it wouldn't let me. But when I think about COP26, all I'm thinking about is what does this mean for the capital stack? How is this shaping the demand? How is this shaping the supply? What are we going to see as new constraints as climate finance just turns into finance? And there's going to be a lot more work on this. There's a great paper out by Carolyn Flamer on green bonds last year. It's a wonderful baseline piece. I've heard it referenced by a lot of people, which means that it is readable even if you're not an academic, which is always a great sign of an academic paper. So it's a great baseline. We're seeing a lot more work in this field, and we're seeing some great leadership by the financiers and by those seeking financing as they institute more ESG hurdles. There was Ivanhoe Cambridge just announced last month a huge pile of financing that had ESG hurdles tied to it, more than 8 billion Canadian.
8.4.
Yeah. And then the last category that I'd point out is a little outside my lane, but it's been a really big focus, and that has been the topic of healthy buildings. And this partially relies on the COVID question in terms of physical health, but it also relays very strongly the importance of how we get people back in buildings. It's going to be such an important conversation as some of us are looking at, say, our office portfolio and realizing that some of our leases that are coming up to a roll-off in the next year or two, maybe walking away, or maybe walking away from part of their space, and how you're going to backfill that space, how you're going to convince people to keep all of your space and drop somebody else's space. You know, how are you going to address that? This is going to become more and more about appeasing your users of that space, and you appease them by helping them with their employee performance and helping them with their attraction and retention of talent. The International Well Building Institute put out a global research agenda this year, technically, and it's a fantastic resource. It is an oversight of the kind of work that needs to be done in healthy buildings to help us understand this from a business perspective as well from a health perspective. And while you may not be thinking, I'm going to go do this research, it's a really great tool to help you take a look into your own business and see what might be pain points within the concept of healthy buildings in your portfolio in the near future, getting out in front of that.
Avis, you hit the trifecta here. Climate, COVID, carbon, you covered all of them. This has been amazing. And then you sort of led into the money question, the most difficult question, which is how can practitioners really use academic research in their day-to-day sort of efforts? Do you have any tips and tricks on that?
Yeah, and the how is, I mean, that's really from the teacher side, that's what we focus on so much, because, and it's an important thing to remember, if you want to increase your depth of deeply interested employees with ESG, I encourage you to maybe look towards some of the younger generations. It wasn't that long ago that, much like you all in your boardrooms, me in my classrooms, I was having to do a lot of sell to convince people of the importance of ESG. Now they all come in pre-primed. I don't get students that don't believe this is core, and I get a lot of students that come in and this is exactly what they want to do. They want to make sure this is core to their job, and they're only looking for employers that align with this. But they're taking a lot of courses on this topic, both in cores across MBAs and across undergraduate degrees, as well as in specialized degrees where they are focusing deeply on sustainability through their own sort of creation of their specializations. So I encourage you to look towards the younger generations for commitment, buy-in, and expertise. But I would also say, in terms of research, there was a study that I did last year. It was officially published. It was put out the year before. It was with Bentel Green Oak, and they've been a great partner for researchers in the past. And they really opened their books to us and let us get a very deep and holistic picture of their office portfolio in the US and Canada. And I was able to, with the team, with Jim Clayton and Rokier Holtermans, we were able to look into it and say, look, I'm not really impressed with building certifications anymore. And my personal opinion is, if you are certifying a building and stopping there, then you are probably not maximizing your investment. There's things you can do to capitalize on the investment you've put into your assets. And so we wanted to dig into ways to go beyond that building certification and look at other ways you can interact and intervene in your assets, both on sort of a hard engineering side and a soft side, dealing with your property managers and your tenants, your building users directly. What I love about that study is when we started that, Bentel was very adamant that they needed results both in terms of dollars and in terms of carbon. And they've always been sort of at the front edge of this conversation, but they knew carbon reporting is coming for them, and they wanted to start measuring now. So that study gave them results measurements in both terms. And if there's one thing I would suggest, it would be get ahead of the curve on the carbon reporting. I think realistically, it's coming for all of us. And it would be so much easier on you all to deal with this in a proactive way than a reactionary way. You don't want to have to do this when the government demands it. You want to be ready already. So that would be my encouragement. Try and get your head around the carbon if you can.
Play offense, not defense. Always wise, always wise. Avis, that was awesome. Thanks a million. You hit the trifecta, and then you set us up for the two things that I need my colleague Alex to do. Number one is show us that poll, because honestly, I kind of forgot about the poll. So that's great. Let's see the results. And then while we're doing this, let's add Jonathan Flaherty from TishInspire. Okay. So we had 117 responses. This is tremendous. And nobody thinks that we've solved the problem. And everyone's worried about the time clock. Let me scroll down a little bit. Some people were watching Netflix, binge watching Netflix over the weekend. That happened. And everyone needs to do more. JP, how are you? TishInspire. You are the global head of sustainability and building technology and innovation. Does this poll result resonate with you? Will you share your vote? I don't know. What do you think?
Well, interestingly enough, as I learned, panelists are not allowed to vote. So I couldn't vote, but I probably would have voted that, well, I like the responses that just get me ears are getting hotter in here. That was the one I would have gone with, but only one person also thought that was an amusing response. But I think the consensus view here, there's so many 2050 promises, so little time until 2030 is probably the right one. And I can say, I'll jump into TishInspire in 1 second, but just answer that question directly. I mean, TishInspire is a net zero carbon 2050 goal, which obviously is not 2030. But what I would say is that we're very focused on moving that forward in the future. Right now, we are trying very carefully to work out how we would actually deliver net zero earlier than 2050 with actual pathways in all of our assets and within all of our funds to understand what the actual work would be required on a per property basis to do that, capital and otherwise. So I think you will see more aggressive goals come from us in the future when we're a little bit more confident on exactly how to achieve those goals and ways that really actually achieve those goals, as opposed to some of the other strategies that we don't think are as authentic. So long way of saying, I think that a lot of folks are trying to think about how to really do this in a way that can be done actually within 10 years. And, we didn't want to set a goal that we absolutely had no idea how to achieve. Now, maybe that's the wrong strategy, but we kind of felt like it made a lot of sense, especially if we're going to say that out loud and to our customers, investors and tenants. And when they turn around and ask, okay, how are you going to do it? We better have a plausible answer. And so part of what we're doing now is by setting that goal, thinking a lot about how we can do that faster than what we have already made the commitment to do.
Well, that shows up in those slides that I showed, where the first goal sounds kind of tepid, and then people say, okay, we can meet that, and we know what we're doing, and let's accelerate. Same thing,
yeah,
right?
And I think that's part of folks coming up with real strategies that actually work and that can be executed. And I don't think that every single person out there has a completely executable strategy, and we want to make sure that we're one of the folks that do.
Well, so let me just for the audience explain a little bit about your contribution to this space, right? Because you've been part of and so thoughtful in sustainability and ESG for, from my perspective, forever, or at least since GRESB got going. So you're original North America's GRESB benchmark committee member. You do 22 unique fund submissions, and it spans the globe, right? Brazil, China, Germany, France, India, the EU, and the US, obviously, right? Many GRESB 5-star funds. But you've got a particular strategy that I think is that hopefully you'll talk about a little bit. And then there's these three stakeholders, right? There's the stakeholders of the tenants, obviously the investors, and then the regulators. So sort of weave that into your conversation, your outlook here on carbon.
Sure. Well, so I guess what I would say is we have two sets of customers that we think a lot about: our investors and our tenants. And they're ultimately, and then we have local governments and state governments who are sort of the other stakeholder in this process. And so those are the principal folks we're responding to, is again, governments and our different sets of customers. And so I would suggest that, looking at the pressures we're facing from those different groups of folks and what they're asking us to do, obviously, I think everybody's well aware of governmental efforts, both local and at the national level, both here and in Europe and elsewhere. So I'm not going to go down that road, except to say there are many, and they are increasing, especially in the EU. And that has driven some of the things you shared earlier, like SFDR, which we think will be a big game changer in the fund industry going forward. But I think what has driven maybe some of the more urgent development of the specific asset pathways is we have a lot more focus from investors on wanting to see those authentic pathways to net zero and really understand what those look like. And so investors have been taking the charge. I think that's the theme we've heard from lots of folks today. And so that's great. I mean, we are excited that investors are more focused. I would say there's plenty of investors, many of whom you've named earlier, who've been focused on these areas for a very long time. But we now see a much larger group of investors very focused, and a much larger group of investors much more knowledgeable about this. And that, you aren't just seeing surveys that come back and try to mirror half the GRESB questions. In fact, unfortunately, half the surveys now want me to do GRESB, and then they have their own 17 questions after GRESB. But the broader point is that investors are becoming much more familiar with the lingo and familiar with what they're asking for, and they can see when the answers are not authentic and not actually executionable and actionable. And so I think that's the difference in terms of clarity, is that you can't get away with poor responses that don't actually drive to an endpoint. You really have to explain how that's actually executable and how you are going to do that in the future.
Well, in your organization, so that's perfect. We're sorry about the extra 17 questions. We'll try to bring those in as we navigate 25. Talk about the sort of what Tishman does, right? You're at the core, you guys do a lot of development.
Mm-hmm.
And
so ultimately, we're private equity real estate. We've done, and broadly speaking, that is certainly what many others do who are in our industry and who are in the GRESB grouping as well. But we do have a large development business, and we build lots of buildings. And so we're in the actively, we have a very third largest department in the company is design and construction, and we're building, over a dozen large buildings and complexes around the world right now. So design and construction and development in general is a key plank of the Tishman Speyer platform. And that has kind of put us in the front of a lot of conversations about development, unsurprisingly, with our investors. And so that has been a big piece of the puzzle. But what has tied into that is as we build those developments, or we buy existing buildings and retrofit them and release them and then sell them, in general, we like to hold assets for long periods of time, but when we do sell, we often sell to folks that are going to own that asset as a core asset, meaning they don't want to really do the things. They want to just run the building that we have filled with tenants and either retrofitted or built. And so we kind of hand it over, sell that to those folks, and they kind of want a turnkey core asset. The key in that thought process is therefore, those folks are generally not interested in solving for the problem of net zero anything, whether that be 2040 or 2050, because that's the expertise they bring to the table. And so in some of the more, as we get longer hold periods and as we get closer to 2050, a lot more investors are realizing that their hold periods may not be encompassing the 2050 or 2040 deadlines, but the next owners will certainly be within those thresholds. And so thinking about the fact that if we're going to build that building today or over the next couple of years, and then we're going to sell it in 12 years to the next owner, that next owner will own it when all of these critical things occur. And they're very unlikely to want to do those things, which leads us back to, we should probably do those things now or in the ownership period that we hold those assets in order to be able to sell them to core into the future. So that's kind of thinking a lot about sort of that development and refurbishment pathway. But what we're really seeing is as the hold periods get longer and we get closer to 2050, investors are much more clearly seeing that these events occur either within their hold period or the next owner's hold period.
Well, and it's really interesting because that duration, right, it really reinforces that this is an investor-led phenomena, because you'd have thought maybe that the tenants would be the ones driving the conversation. Have you seen anything from the tenant side?
Yeah, absolutely. We have plenty of tenants that are asking, but not in ways, I mean, you know, we have lots of tenants that want to know what we're doing in their building or in the building they occupy, but we have not seen anything close to the focus that investors are now bringing to the table. And I think that that's probably because for tenants, it's an important issue, both for their company and for the reputation. But at the end of the day, for most tenants, real estate and occupancy costs are not that great of a percentage of their total business and expenses. Whereas for investors that are making large investments with us, these are significant investments. Buildings are quite expensive. And so they're putting a lot of money at stake and they are expecting returns. And so the focus on that is a bit different than I think what the tenants bring to the table.
I really wanted to have you be the anchor person here, because since I've known you, you've been talking about carbon. It's all about carbon, dummy, it's carbon, right? So we've kind of hit, there were 3 questions I had lined up for you. The second one was why now? I think we've kind of solved that with the arc of this program. So now what? And now what is really, do you have tips, tricks, strategies, things that you're working on when your executives come to you and you're like, yeah, here you go, here's the plan?
Well, sure. I mean, we've laid out a lot of the plan, but I guess what I would say is, you know, for us, the next focus is really focusing on Scope 1 emissions. You know, we want to make sure that we have real pathways again to net zero, and Scope 1 emissions are the place that you kind of have to start, because if you are doing the emitting, that is clearly within your remit to change. And so when we look at assets and we think about pathways to net zero, Scope 1 emissions are the place we're starting with. And then we have a series of steps we take from there, which I'm sure we could share some other time. But we have a playbook for this, and we think we got a pretty good plan here. But I will say that it's going to take some time. And so, you know, as we develop those pathways for each asset, we need to get investor approval, we need to get partner approval. But I really think we finally, you know what to do. And I would add broadly, just last comment on that, is I think that most of what folks need to do is actually pretty well known. I don't think there's some new massive technology that is going to dramatically change the sort of arc of decarbonization. Things may get more efficient. There might be a better model of XYZ, but we kind of know broadly what needs to be done here. It's more figuring out how to do it within the context of the particular investment or structure or deal, and then laying that out with all the sort of other lenses that go into that. Occupancy, lease roll, when's the mortgage up, all sorts of other things to come up with that real plan that can be executed for net zero at the asset level.
So the takeaway here is it can be done. It doesn't require some kind of technology that we're going to invent, right? That we have the tools and it's just a matter of will, and you can do it.
Yeah, although I would say, look, there's going to be plenty of technological advancements over the next 10 years to make all of this faster, cheaper, better, you name it, right? But I don't think there's a technology out there that needs to be invented that would be some game changer. It's more making sure all of these things are advancing in such a way that you can execute them at different scales, large buildings, small buildings, different environments, different countries. But that's where the action will really be.
I encourage everybody on this call to hang out with Jonathan Flaherty. He is a lot of fun and super knowledgeable when it comes to these issues. And if you've got questions, he can at least point you to some thoughtful places, without a doubt.
Thanks, Dan.
Thanks for being part of our event. Sarah Welton, are you out there? We are at the bottom of the hour, and I'm curious to know.
I'm here.
Excellent. If we can get, all right. Sarah, did we learn anything today? Were you able to take in some notes and some concepts?
Yeah.
Help me.
Well, and I guess you did a great job prepping the speakers, because they all, they got the talking points. And Jonathan, certainly, or JP, I should say, closed us out with providing an example of, this is a business decision. This is our fiduciary responsibility to our investors. And it's an opportunity, honestly. And I was taking some copious notes. Fulia, talked about, climate change is a business opportunity. It is not to be, seen as something that we are just coming down, taking to task. It's an opportunity. It's an opportunity to, as Zoe said, create, a conversation across the entire team. It should be integrated within the entirety of a business. And then, Greg honed in on rent growth specifically. It's going to depend, rent growth will depend on your focus on sustainability and how you are paying attention to it and demonstrating that to your potential tenants. And then I loved the Alice in Wonderland quote. Again, focusing in on data, strategy, KPI. If you don't know where you're going, any road will do. Figure out where you're going. Direct the ship. And then again, thinking about the transition from climate finance to finance, as Ava said, like, this is all just going to be business as usual, in a couple of years. And we just need to think about this as a business challenge, as a business opportunity, and acknowledge that it's within our fiduciary responsibility to kind of, get on it.
So we're going to take 2021, which was climate, COVID, and carbon, and we're going to advance to where again?
You did it. You captured it before. Data,
yeah.
Disclosure, demand, the change in demand, offense.
Perfect.
You got it.
Remember those three numbers, right? 2,968 days, 423 weeks, 8.1346 years till 2030. So with that, till next year, thanks for joining us for the GRESB 2021 results events. Keep up all of the hard work on sustainability and ESG, because we're all in it together. Thanks again.